Let's take a look at some information and charts on Ethereum Classic for BraveNewCoin. At this point, most of us are probably aware that Ethereum Classic is a fork of Ethereum, which was birthed out of the DAO bailout in July 20th, 2016. Essentially, a bunch of people aped into a DAO smart contract that had a vulnerability, and a significant amount of ETH was lost at that point in time. And the decision was made by maybe a few at the top, including Vitalik, that they wanted to bail out Ethereum and basically roll back the chain. Whether or not you agreed with that or not, at this point, doesn't really matter, but if you disagreed with it, you'd sided with ETC, and if you agreed with it, you'd side with Ethereum. A few years later now, obviously, Ethereum has won the day momentarily here. Now, ETC has also had a series of other issues and problems, 51% attacks, other vulnerabilities. It's kind of gone through it. It's really gone through it. And in my opinion, nothing matters until Ethereum goes proof of stake, because once we have an actual proof of stake Ethereum and proof of work Ethereum, then we can have this A/B test or popularity contest between the two. Now, it's unlikely that Ethereum Classic will ever rise to prominence against Ethereum so long as Ethereum lives and breathes because of the community, the projects on Ethereum, and so forth and whatnot. And, they can bring on NFTs. I'm not going to discredit any of the hardworking people at Ethereum Classic, but they're fighting a very, very tough and losing battle against Ethereum. The first test is when Ethereum, like I said, goes proof of work. What happens, or proof of stake? Does Ethereum collapse under its own weight? You're probably rooting for that if you're an Ethereum Classic maximalist. Hash rate has slowly begun to uptick here on Ethereum Classic. I don't know why, because if you have hash rate, you're probably mining on Ethereum instead of Ethereum Classic. There's really no reason not to, especially based on miner revenue. I'll show that in a second. If we look at the ASICs that are coming, there are two. I thought they were coming actually this month or November. Looks like they're listed as coming soon. You can probably see some of that here on Ethereum Classic, but again, why would you mine Ethereum Classic if you can mine Ethereum for a much better profitability rate? This is at 4 cents per kilowatt hour. All of these ASICs will be bricked for Ethereum once Ethereum goes proof of stake, so they will have to go somewhere. So you're going to see a large spike in hash rate once ETH goes proof of stake, whenever that is, 2, 3, 4, 10 years down the road. Who knows? We'll see. So that's the first significant thing or event for Ethereum Classic. The second thing is Barry Silvert's Grayscale pink sheet ETCG. Now, they currently hold around 9% of the entire circulating supply of ETC. It's at a negative 43% premium. They have no obligation other than public outcry to right this ship. This could go, I guess it could go to any percentage the market's willing to tolerate. They have bought back ETCG in the past. They will likely do it again at some point in time, maybe at negative 50%, I don't know. But they're going to continue to eat ETC circulating supply. So as with any whale in anything, pay attention to what they're doing. If they decide to close this down, that is the ultimate death knell for ETC. Now, I don't envision that they do that because it's a cash cow for fees for them, which is one of the reasons they probably should placate the investors a little bit by attempting to bring this premium back to parity. Now, they've recently done so with GBTC, which may signal that they don't actually have a chance at ETF conversion, because if they did, they'd just leave it alone and it would fix itself. So lots of game theory here, but the big thing to pay attention to is just the amount of ETC that they hold and what happens with this discount or premium. Here's the miner revenue between ETH and ETC. You can see ETH is at 60 million on any given day, ETC at 1 million on any given day. So it's pretty clear where most of the money is going between the two. No chance for Ethereum Classic. It surprises me that it has any hash rate at all, honestly, based on this, based on mining revenue with fees and whatnot on ETH as well. It just makes no logical sense to mine ETC over ETH unless you have some stance on the issue. ETC's transaction counts have continued to increase along with hash rate, so that looks rather normal. Mean transaction size kind of flat and declining. You can't be bearish on a rising transaction rate, but you certainly don't want this spiking up and down bipolar mess. It's much better to see this slow rise like we did in 2017 when there was actually fundamental something going on, right? It looks similar. You could argue the same. That'd be fine. But this is what you want in a bull trend. You want on-chain fundamentals to match price. NVT, inverse metric of economic utility relative to price and active addresses here. NVT in the line has risen dramatically. That says market cap is overvalued relative to on-chain activity. Active addresses flat since July 2020. They do like stress testing or whatever the heck this was, and you get a lot of spikes and false data. But in general, recently, active addresses just flat. Nothing really going on there. If you're bullish, you want to see active addresses rising week over week. MVRV relative to price, MVRV in the fill here. For most coins, this caps out at a 2x multiple, and that is usually the top. MVRV is a direct measure of market cap versus on-chain activity. So this means when market cap is 2x on-chain activity, for most coins, that is the top. It was one of the tops in 2017. It was definitely the top this year in April. So going forward, if we get another spike up in ETC, this is the first thing I'd be watching. What is MVRV? Currently it's 1, and that doesn't mean we only have a 2x from here. It means if market cap rises faster than on-chain activity, we'll top sooner. If market cap rises with on-chain activity, we'll top later. In the best case, the most bullish thing is a rise in market cap, or a rise in on-chain activity and a decline in market cap. That's a bullish divergence, if anything. So purely based on technicals there, that looks fine. ETH Classic at Google Trends past 5 years worldwide, flat as a pancake, essentially. Again, if you're bullish, you're going to want to see this spike up, just like it did when it hit all-time highs earlier this year. So I know that this search is probably legit for ETH Classic, not ETH, not anything else. Classic Coke, whatever. Classic anything, right? This is Ethereum Classic because it matches the price chart. And as far as technicals are concerned, kind of interesting stuff going on. Now, it's not going to outperform ETH or BTC in the near term. It may do that late cycle, ultra late cycle, like December 25th to January 10th. That's usually the best time for some sort of late cycle alt rotation. Now, this did benefit from DeFi mania earlier in the year, January, February. I don't think that's going to repeat in 2022 on anything. I think everyone's going to take their cap gains, long-term cap gains, if they haven't already. But based on the MA multiplier, buy zone is anything below 35, sell zone is anything above 170, and the blast off zone is anything above 95, 98, 100, whatever this midline is. Not a lot of data here on the 1 year MA. The green zone is the buy. Again, it's been mostly in the green zone. Hasn't really flirted with the sell zone until this year. But let's say this does have another run. 170 is what I'd be looking at. MVRV of 2x is what I'd be looking at. On the daily, 5200 EMAs, VPVR, and RSI on Polo. This doesn't look half bad. It bounced on the 200. It's holding in an equilateral triangle, arguably in Wyckofian markup post accumulation. So I don't hate it on technicals. It's just ETH looks so much better to me. If you're going to trade a USD chart, ETH even looks better to me than BTC here because it's pre-breakout. This looks like it will break out to the upside, but it just needs a little bit more time to me than ETH does. ETH looks primed for ignition. So again, I don't hate this on the USD pair. And here's just a schematic of Wyckofian accumulation, breakout, throwback, reaccumulation. That's kind of where we're at here. This whole thing is considered markup. So we're in the reaccumulation phase before markup. On the cloud, it doesn't look terrible. The cloud is less powerful when we're ranging, and we've been ranging since May. But this does give you a sense of between the triangle, some random diag, and some random level on the dynamic support resist levels. When we're above 60, it's probably go time for Ethereum Classic to have some sort of move to the upside. This also measures on the fibs to 170. So I don't hate 170, which is more than a 3x from here. It's just a matter of the timing relative to the high caps, because against BTC, this thing is a death cross. It's just rolling down the table, rolling off the hill, falling off the cliff, whatever metaphor you want to use. Something that's done before. Basically all of 2020 was just this slow bleed, successive, faster and faster moves to an eventual low in January, February, when it double bottomed and took off against BTC in April. So I really don't like this until it hits something in support land on VPVR, something on the yearly pivots, basically where it previously Adam'd and Eved in 2019. So I would just wait for a double bottom. It looks like loves the double bottoms, whether it be Adam and Eve or W or whatever. I would just wait for that. So this thing probably has months to go before the bottom is in against BTC. And you could even wait for a crisscross on the 5200 because that looks like a fine entry for any upside as well. So between the double bottom and the EMAs, that's all you really need to watch. Here's how it looks on the Bollinger Band. It's always interesting to see this. He calls it, John Bollinger, calls it walking down the bands, where you just have this high likelihood of continuation, in this case bearish. And then against ETH, it looks no better. Death cross, very similar to 2020, where it just melted very rapidly for an entire year. So this is not a knife catch for me. This is not anything for me. I wish you luck if you're trading this against ETH or BTC. If anything, it might, I don't know if it's better to short this relative to BTC and ETH or long BTC and ETH, I don't know. That depends on the exchange and the leverage and whatever else, the size. But that's an interesting experiment to think about. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techami Capital and Enzyme.finance, a non-custodial portfolio management tool where you can send Ether USDC or just watch what I'm doing. You can see everything, including AUM performance allocation, all the vaults I'm in here on UniSwap and Aave, as well as the trades in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.